Current juncture, I believe that the markets are getting into a sideways, consolidation. We are into a 500-point band on the Nifty at 17,500 mark. It makes a lot of sense to look out for stocks which are, just about on the verge of a breakout. So I think in that sense, I would go with the PSU names. I think something like ONGC, NTPC are the top two names, which I believe look very attractive at current juncture. If you're looking at it from the banking pack, then I believe you can look at even a Federal Bank, Can Bank or Bank of Baroda as good, interesting plays.
All right. This one is coming from Shanti Chedela, and this one is on Sobha. She's holding about 100. He's holding about 150 shares at around 700 rupees per share. Wants to know if the stock has a potential to go up till 750 in the short term. Also wants to know what sort of a stop loss should one actually keep in mind while staying invested in this one. What's your take on this one, Kunal? Sobha, developers, realty, as we all know it, what sort of stop loss should one keep, and can it move up to 750?
See, an ideal way to try and trade is to have a risk reward of 1:2. So if you're looking out for maybe 100 rupees as a target or a return, then you need to have a 50 rupee kind of a stop loss. But then of course the risk, the reward, the position sizing, all of that matters, as well as the time frame for you to try and take those trades. Plainly speaking, for Sobha, I would expect that the stock would get into more of a short-term correction further. My sense is that the stock should drag towards at least 620, 625 over the very near term before you may see a credible bounce coming out into this time. So if you're looking to average, I would suggest to wait out for 600, 620 range.
All right. Avinash, good morning to you. Alex joining in as well. Neha from Kolkata has got a question for you. This is on Dhampur sugar or Awadh sugar. Which would she be better placed investing in based on the fundamentals?
Yeah, good morning, Alex. I think, Alex, Dhampur Sugar definitely seems to be well positioned, considering the fact that it's put up a large ethanol capacity already. I would believe that not only the sugar business but even the ethanol business is going to make a significant contribution to the earnings in FY23. Already we are seeing that ethanol consumption has gone up, and I think this is now going to be a big profit contributor to Dhampur. I would believe that in the near term the stock has corrected, but I think if one would take the next 12 to 15 months, then I think one could definitely expect even a target of around 575, 600. So I think Dhampur could be a better choice. Although Awadh is also a large player in the sugar pack, I think ethanol is something which is going to differentiate Dhampur.
This one is from Harish Kumar, and he's writing to us from Bangalore, and he's holding TTK Prestige 100 shares at the price of 990 rupees per share. He wants to know whether it's the right time to average. He wants technical views on this particular counter. Kunal?
I would suggest to wait out, not to average at current juncture, because the long-term bearish crossovers have actually happened for the stock, where the 50 DMA has crossed below the 200 moving average. Now, whenever that has happened, it's resulted into the stock getting into a multi-month downward trend or a correction for itself. Possibly, my sense is that if the correction lasts for another couple of months for TTK Prestige, you may see the stock coming back towards even 750 or below that. If you're looking for a better average point, I would suggest below 750 could be a good level.
Okay, Chayank Hazarika is writing in asking about Adani Green Energy. Avinash, if you have coverage, would you say that this is a good stock to invest in for the long term?
My sense is I think Adani Green definitely is in a good business, and growth prospects are also positive. But I would believe that if one were to buy this stock, I think it's better to probably wait for some moderate correction. The stock has run up significantly, and I think in terms of valuations, it's gone beyond normal valuations. So I think clearly if one were to buy this stock at around 2600 or maybe 2650 odd, probably a mild collection, that would probably give a better risk reward. There's no doubt that this business will expand significantly in the next 2 to 3 years. But at these levels, I think the valuation seems to be fair to expensive. So I think wait for a moderate correction and then accumulate.
Mr. Balan, and he's saying that he has a holding in GSFC, that's in the fertilizer pack, and GMDC in the minerals pack, and he's saying that he's making about 10% profit in both of these counters. So he wants to know whether he should stay put with these holdings or should look to switch to another sector altogether. What's your take on this one, Kunal?
Well, I would suggest to stay on with these names, at least as of now. My sense is that these stocks can get into retest of their previous highs. So for GMDC, for example, the previous high was around 224, 225. For GSFC, I think if I'm not wrong, it was around 198 or 199 levels for the stock. So I believe that there should be a double retest of the top at least for these stocks. A better exit point would be to wait out for these stocks to get into one more phase of rally and then look to book profits.
Okay, the next question is coming in from Mr. PGK Raju. He says that he's a retired banker. He's writing in from Vijayawada, and he's got Central Bank of India, which he bought at lower levels at 19.5, he says, and he's asking what the 6-month view is. Kunal, would you be able to help him out?
Well, I would suggest to avoid the stock. If you're holding, I would suggest to try and exit the stock and shift on to some other quality mid-cap, PSU banking names or large-cap PSU banking names. Now that will depend on the risk appetite and how many number of stocks, etc., which you want to buy. But I believe much better quality stocks could either be SBI from the large-cap PSU banking names, or you can look at even a Bank of Baroda, Canara Bank.
Okay, this one is from KJ Singh, and he wants a long-term view on Tata Investment. What's your take on this one, Avinash?
Yeah, I think Cheryl, Tata Investments is basically the group holding companies for all Tata companies. Since this is a holding company, normally the way the market values these companies is on a price to book basis, and typically investments in these companies are discounted at a normal kind of rate of around 20 to 25%. Now, the best part is this Tata Investments would continue to do well as long as all its group companies continue to do well. So my suggestion is, I think considering the fact that it is unlikely that these companies' shares would be unloaded in the near term, in a hurry. This is only meant for those investors who want reasonable capital appreciation but good dividend yields. So, if somebody were to go for this kind of stock, then one has to be little patient and keep a time frame of at least 2 to 3 years. So, holding companies will never get the same discounting as standalone companies. So, please keep that in mind.
We've got Bharatwaj from Madurai, and he's asking about KRBL for the long term, which he's defining, Avinash, as 5 to 10 years. And he's wondering whether this is a good stock to buy, because he is of the opinion that there will be strong demand for basmati rice in the future as well. What's the view here?
I think, Alex, one thing is very clear that the developments, what we have seen in Russia, Ukraine, plus the Sri Lankan markets, I believe there's going to be a big, agri-grain crisis in the coming, months and, time frame. So definitely rice as a commodity is definitely something which is going to be an essential, crop which most, countries would obviously love to import. And I think even the currency is favoring such companies. So I think definitely if one were to look at the next 12 to 15 months, one can definitely take a small position here. Medium to long-term prospects appear to be quite good.
Right, and moving on from KRBL on basmati rice to LT Foods, which is also a similar play, and this one is from Sagar Kate. He's saying that he has 100 shares of LT Foods, which he's holding from the levels of 81 rupees per share. He wants to know whether he should add some more at current market price, Kunal. Also, he wants to know the technical view on this counter for the medium term.
See, now what has happened is in the last 4-5 days, the stock has rallied up significantly from 75, 77. It's jumped up to 94, 93, 94, where it's currently trading right now, which means that it's possible that the short-term indicators are overstretched. So if you're looking for a better level to enter, then I believe you should wait for some correction, maybe a 5% correction. 87, 88 could be a good level where you could look to enter. From a medium-term play, I think it's a very good stock which you should hold. You've bought at a good price. I would suggest averaging out at lower levels could be a good strategy for the stock.
Okay. We've got a question coming in from Sudha, and she's asking whether she should sell MTAR Technologies at the cost price and buy Bharat Dynamics or any other stock for the long term in the same sector as Bharat Dynamics. That's the question, and she's saying that she already has HAL in her portfolio. Avinash, what's the view here?
I think, she has got HL in her portfolio, so I think, Alex, she can continue to hold on. The company has a very robust, order book, and I think looking at the kind of recent news flows of new order wins, I would not be surprised that one could comfortably see a 15 to 20% rise in HAL. As far as MTR Technologies is concerned, I would believe that, if the investor can give a reasonable time frame, this is also one company which operates in the space, nuclear and the defense segments, a very interesting company. So I think keep a little longer time frame, and I would not be surprised that this stock could possibly touch 1900 or even 2000 odd levels. So definitely long-term prospects appear to be good, but yes, in the near term there could be a little bit of short-term volatility and some underperformance in the stock. So the recommendation is please hold on to both the stocks.
Okay, this one is from Rajesh Narula. He's saying that he has 500 shares of JM Financial purchased at 105 rupees per share. He's not basically told us what he wants to know about this counter. So nevertheless, I'll come to you, Kunal. JM Financial, how does this one look on the chart?
See, I would suggest that you should try and make a switch from JM Financial to some other broking names as such. So I think Angel One at current levels looks very attractive, as well as on dips if there are any corrections. You can look at even Motilal OFS as another good name. The stock is consolidating at this 890, 900 levels, just around this 200 DMA. So I would suggest a better alternative could be switching to either of these two names.
Okay. Jayashree Murali from Chennai is asking this next question. This is for you, Avinash. Triveni Engineering from the sugar space, Poshak from the chemical space. She's identified these two. She's wondering whether to add these two from the perspective of the next 3 years.
Yeah, definitely. I think Poshak is into specialty chemical basket of products, and Triveni Engineering is also a large player in the sugar and engineering space. So I would believe, yes, both these companies have got good tailwinds, provided she's got a time frame of at least minimum 2 years. I would not be surprised that these companies could do exceptionally well. As far as Poshak is concerned, the liquidity is very low, so one has to keep in mind that this is not a very highly liquid stock. But yes, fundamentals are strong. And Triveni also, I would believe that it's not a very liquid stock. So both these names, if she were to invest, it's better that she takes a delivery call and keeps a time frame of at least 2 years.
All right. On that previous query of JM Financial, I hope Srinivasan, your query is also answered, like what Kunal just said about the broking firms altogether. Next one is for you, Kunal, and this is a bit longish query. This one is coming in from Sagar, and Sagar is asking you if you remember that he and his father were in a race for IndusInd Bank and AU Bank, and he's saying that he's won that race by a 20% more profit. And he's saying, but this time he's again in a race with his dad, and this time the stocks are ICICI Bank and Axis Bank. Both of them have purchased 3,000 shares at the levels of 670 rupees per share for both of them. But he wants to know which one will you bet on this time? Is it ICICI Bank or AU or Axis Bank? Which of these counters do you think will win the race over the next 1 year?
See, I'll bet on both father and son. I believe, I think it makes good sense to have both these stocks. Now, ICICI Bank has undoubtedly been a very good performer in the last 2 years. When we try and extrapolate the possible returns for the stock, it seems to be that the stock should enjoy a sweet spot over the next couple of years as well. But I believe Axis Bank, and given the fact that the stock was in a lot of news flows in the last few months, I think that stock can also try and play a catch-up of the underperformance. Now, when a sector gets into a rally mode, it's but obvious that the mid caps and the tier 2, large cap names or the small cap stocks, they would always tend to give you more returns and better alpha. So you have to try and look at, that if you're looking at banking stocks as a big trend over the next couple of years, then of course Axis Bank can stand to give good returns, but then you have to match returns with stability, which is why I believe both these stocks are essential for a part of portfolio.
Okay. Avinash, a fertilizer play for 1 year. Aarti wants to know whether you would bet on UPL or Rallis India.
I would believe, United Phosphorus seems to be a better bet because they have a larger geographical mix, not only in India, but Europe as well as the Latin American markets. And I think the company is expected to do significantly better. Already the company has announced a buyback at 900 rupees. So I think UPL definitely sounds better, although, Rallis also should do well. But in terms of size and in terms of the scale and in terms of the risk reward, I think UPL probably one could expect a target price of at least 925 to 950. So UPL would be a better choice.
Okay, this one is from Raghu. He wants a long-term view on SAIL. He's already holding some shares at 99 rupees per share. What's your take on this one, Avinash?
Yeah, I think within the metal sector, SAIL is one company which has underperformed. But I think one positive part about SAIL is that a significant amount of debt has been repaid. So this time, the company is going to benefit significantly from the uptick in the steel cycle. And as far as prices are concerned, metal prices still continue to be solid with a very strong growth in infrastructure expected. Our sense is that SAIL will definitely do better in FY23 also. So since he's purchased at 99 rupees, I would suggest him to hold on for the next 6 to 12 months. a target price of at least 140, 150 looks very reasonable. So I think best thing is to hold on, despite the fact that stocks from this space are extremely volatile. But definitely, numbers which would be coming out from the fourth quarter in FY23 should be significantly better than last year.
Okay. So the question is from Sunny, and he's asking about 3M, which he's holding 4 shares of. Is this a good long-term investment? Avinash, what's the view here?
Yeah, I think 3M is a MNC company and operates in a very niche space, Alex. We have seen that, this is one of those companies which got very less impacted by the COVID. And going forward, the kind of product launches they are planning, the kind of, geographical reach they have, not only in the Indian, but in the overseas markets, I would believe that, this stock could scale significantly higher levels. One reason is that earnings growth is going to be very strong. The company has a very small equity of just 11 crores. So probably, if the company decides to reward its shareholders with a bonus, I think that would not be surprising. So I think continue to hold on. These are companies which are, which can give reasonable risk reward only over the next, say, 2 to 3 years. So good long-term prospects.
Right, this was from Shanmugha Sundaram and it's on Voltas, Kunal. He wants to know whether he should buy a Voltas at current market price. He was looking for a 6-month horizon.
I believe you can look to buy the stock, but I still believe that Voltas is in such kind of a zone where it will give you more gradual and slow kind of returns. So I think holding on for 6 months, you could probably expect an upside of 10-15% max for the stock price. But I believe that the bigger returns could probably be unleashed if the stock, if your holding period is more than at least a couple of years, if not more. So you can look to buy the stock at current levels, but I believe maybe a 1400, 1450 could be a capped upside for the stock in that time frame.
Okay. Coming back to you, Kunal, on this next one, Associated Hotels. I'm hoping that you have a view on this. Puneet has got a question on this. He's bought at levels of 509. He's got as many as 100 shares. And he's looking at a target in the very short term of 525. Is that something that is achievable?
Well, I think it's achievable. In fact, I remember, I think we discussed about this last week as well. I mentioned that the stock looks to be attractive, and if you've bought at higher levels of 509, you get a correction of 10%, 485, approximately, for that kind of a stock. You should look to average the stock, because when you're riding on high momentum, the stock will keep on giving you those opportunities of very short-term swift corrections, and you have to take opportunity of those corrections. So it's a stock which you can hold on for 525, but I believe much better strategy would be to buy on dips in case if the stock comes back towards 480, 485.
Okay, this one is from Rahul Jain and he wants a view on Oracle Financial Services. He's already bought some shares at 3,400 rupees levels, about 156 shares of Oracle Financials. What's your take on this one, Avinash? Oracle Financials, how does this one look to you in the IT pack? Does it make sense for Rahul to stay put with his holding?
Yeah, I think, Cheryl, Oracle is a product software company, and I think a majority of the holding is still with the parent. There have been reports for quite a long time that this company could get delisted. But most importantly, if you see the kind of performance this company has put up in the last 2 to 3 years, it's been doing extremely well. Even during COVID times and even now post-COVID, I believe that the product software business will grow continuously. Most importantly, large part of their revenues come from the license fees, which is extremely profitable. Hopefully, I think if the delisting happens, it will happen at a very significantly higher premium to the market price. So continue to hold on. This is a stock which I think can give multi-year returns over the next, say, 2 to 3 years.
Okay. We've got another question, Avinash, coming in on the ethanol story. And I think this is a broader basket from what you had spoken about as well. Renuka Sugar, Balrampur Chini, EID Parry, these are stocks that Shravan has identified. Would you say, which of these would you say is the best bet? And then I will very quickly go across to Kunal on the one that you pick.
Yeah, I think my guess would be Balrampur Chini would probably be better positioned here, considering the fact that it's got a very large ethanol capacity. And I think, sugarcane, already it's a well-established player. So I think it should benefit significantly. And I think you could see better numbers coming in FY23. EID Parry would be my second choice, Alex, because here also I think, the company is a value-added producer of, sugar as well as lots of other businesses like sanitary ware, ceramic tiles. So I think EID Parry should also do well. Given a choice, I would first bet on EID Parry, second on, Balrampur Chini. But Renuka Sugars I would avoid because, the stock has seen a significant upside from lower levels, largely due to some speculative reports. So I think my choices would be EID Parry and Bajaj Balrampur Chini.
Choice. Then EID Parry, Kunal, on the charts, at what point would you say is a good point to accumulate for the long term?
Well, I think current levels is a good level to accumulate, but if I have to just add on to one stock from the pack, I would look at maybe a Praj Industries as a much better alternative given the chart structure.
All right. This one is coming in from Amy, and she wants a technical view on Polycab. How does this one look on the charts? She already purchased, I think, around some shares at around 2,200 rupees per share.
See, I think it looks very attractive. In fact, at 2,600, you are sitting on a good set of profits for Polycab. It has this tendency of getting into sideways correction after a breakout, slow and steady, and then once the stock gets in good momentum, you see a breakout yet again happening for stock prices. It tends to change the range for itself over a medium to long term time scale as well. So it's a good stock. You're sitting on good profits. Would suggest to hold on, keep a trading stop loss of 2,450, 470, and look to ride this trend.
Okay, we've got a question on Tata Motors. Manoj from Delhi is asking about the current market price. He's missed out on the previous run-up, Kunal. He's wondering whether to buy at these levels, or is there a possibility of some correction from this point?
See, my sense is that Tata Motors is not performing in a very same breadth what it was since the previous 2 years. It's been a bit of a drag kind of a stock. You look at the auto index in the last 1 month of price recovery, Tata Motors is not the topmost performer from the auto pack. You have M&M, which has done exceptionally well. Ashok Leyland as well has done pretty well for itself. So when you are into such kind of a zone where a stock tends to underperform, it's better to try and buy it on dips. 420, 415 could be a good level where you can look to enter.
All right, and with that, let's kickstart with the rapid fire. And the first one is for you, Kunal. This one is from Joy Sheila. Shall I buy SBI cards at current market price is a query?
Well, I would suggest to avoid the stock at current levels.
Okay, Rakesh wants to know about buying a PVR, or rather holding on to PVR and Inox. Avinash, what's the view? He's wondering whether there will be a fourth wave of the COVID-19 pandemic that could cause problems.
I think you should continue to hold on. I believe that at least as of now, there doesn't seem to be any fourth COVID wave. So continue to hold on. I think FY23 should be a lot better.
This is from Kumar. He wants to know whether he can make fresh entry into Adani Wilmar. Avinash?
No, I think Adani Wilmar definitely has shot up. So I would believe that only one correction is there.
Okay, question coming in from Rajeshwari. She's bought Hisar Metal at levels of 142. She's lost just a little bit of ground. She's wondering whether Avinash to book loss and enter other names like JSW Steel or Tata Steel.
I think JSW Steel would be a lot better. I think a far better choice compared to Hisar.
All right, this one's from Achal, and Achal has Bharat Dynamics at around 428 rupees per share. It was an IPO allotment. She wants to know whether she should book profit or hold on to it. She can continue to hold on to it for the longer term. Avinash?
I think she should hold on. I would believe that Bharat Dynamics has got an 8,004 order book, and I think FY23 should be a lot better.
Okay, Vinay wants to know between Bharti Airtel, Kunal, and Tata Power, which one can he buy from the perspective of 1 year with the expected return of 20 to 25%?
I think Tata Power would be much better.
Okay, Muthupalani wants to know whether he can look to enter Gujarat Ambuja exports at current levels. Kunal?
Well, I would suggest to wait. I believe that these stocks have seen a good rally in the last 1 week. I would suggest to avoid and wait.
Okay. Gentlemen, thank you so much for taking the time, for answering all the questions that you did answer. I'm sure a lot of our viewers have benefited. And for all the viewers that have missed out on their questions being answered today, we will be back at the end of the long weekend. So do stay tuned for that, and hope you have a lovely weekend. But before you do go and celebrate that weekend, we've got more on this show. So do stay tuned. We'll be back after this short break.
Behind the numbers in action.
the personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you asked, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets... Welcome back. You're watching Buy Now, Sell Now. And in fact, as we start this next segment, you have the Nifty 50 that is trading almost flat at this juncture. But one group of stocks that has been bucking the trend, that is doing quite well right now, is the fertilizer pack. Stocks like RCF, NFL, you have Chambal Fertilizers. All of them are rising quite significantly in trade on account of reports of the government increasing the fertilizer subsidy. Giving us details of that impact of that subsidy is Sharad Dubey. Sharad Dubey is joining in. Sharad, what are you picking up? What are the implications of this subsidy?
The reports are suggesting that today there is a cabinet meet happening to decide the new rates for the fertilizers. Now almost if you see the subsidy quantum is expected to go ahead and increase for the fertilizer space, and almost 25 products have been outlined for this. Now the subsidy amount would be there for the various segments such as the DAP as well as potash, and this amount on certain products could be hiked as high as 50%. Now going ahead, the impact in the short term, there won't be a very high impact, especially on the imports, and there won't be any fertilizer shortages in the country. And apart from that, there is lesser reliance or almost nil reliance in imports, especially in the Kharif season. Now going ahead, if we see the history of fertilizer subsidy, we see that has increased from 71,000 crore to almost 1 lakh crore in FY22 to 23, but the requirement for subsidies, seeing the current higher global prices going up, should come to the tune of almost 1.6 lakh crore as per the analysts and the reports. And apart from this, now let's move our discussion to the stocks, where the government is investing in 3 stocks in the fertilizer space, that is RCF, NFL and FACT, which are listed, and the government is having stake between 75 to 90%. And because of this, the fertilizer stocks are in focus. And if you see all the stocks like RCF and even NFL, FACT and even Coromandel International, we see their 1 month returns and year-to-date returns. It has been spectacular, and the stocks have risen by almost 6 to 30% on a month-on-month basis.
Much for that update, Sharad. We're slipping into a short break, but there's more on the other side, so do stay tuned. Everything that you need to know about your money, how to earn more, invest smartly and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?